Let's get to our guest now, Jameel Ahmad, Chief Market Analyst at FXTM. Now, the last time we spoke, the ringgit had just hovered around 4. It's now heading towards 380. Do you think this will be sustained?
Well, there's definitely an air of positivity right now for the emerging markets. And basically what has happened is we've had a substantial rebound in the commodity markets, excessive dollar weakness due to pushback interest rate expectations. The China risks have reduced the atmosphere. This has improved the emerging market sentiment. And as a whole, the Malaysian currency is now looking more positive.
Now, looking at the way oil markets have been playing out, we have Brent set for a weekly close above $44, WTI set for a third weekly gain. What does this portend for the ringgit?
Well, look, when the oil markets, they rebound heavier, it improves the emerging market sentiment. So the correlation is then that the Malaysian currency can also enable a further rebound. Personally, I think the $44 region for WTI oil is crucial. This is what traders should be watching out for. And if the oil markets manage to close above, this would then enable the Malaysian currency and those commodity-linked currencies to then push on to the next stage of their psychological recovery of what have been very heavy losses.
Yeah, let's get on with that. Now, Jameel, you say there is a reduction in China risk, but you have the likes of George Soros raising a red flag around debt-fueled expansion. And today we saw the onshore yuan fall to its lowest since March 29th. That on the back of the dollar rising. What are you reading from this?
Well, look, I basically think that as we're entering Q2, and I was in China recently, and I was saying, look, the RMB, the yuan, will be more stable for Q2. This would enable some positivity when it comes to the emerging markets and the sentiment. And there's a couple of reasons to be more positive on the Chinese currency right now. GDP growth is slowing down, but it's a little bit more stable. We know that the PBOC are publicly declaring an intention for more stability in the currency. This will improve the emerging market sentiment. But on top of this, what the headlines really were focusing on was a huge outflow of capital from China and a very sudden depletion of China's foreign reserves in the PBOC. So more stability for the RMB will mean those pressures ease into the background. This is why we're a little bit more positive on China right now.
Are you detecting correlation between the yuan movement and the ringgit?
This is a very interesting question. And what I would say is that the yuan volatility cooling down somewhat is helping improving the emerging market sentiment. So perhaps that's where the correlation is. The yuan's more stable. This is helping those emerging market currencies. As a result, the Malaysian ringgit is looking more positive.
Now we're halfway through April. Which currencies are you really liking?
Well, one currency that we really like right now is the dollar franc. Dollar franc, it dropped below its 200 moving average on the daily time frame. As a technical trader, this was a critical signal that the franc was set to maintain further gains. And we have seen the dollar franc drop more further since then. But again, it's the RMB as well. We're not saying it's going to continue its strength, but when you compare it to what we saw at the beginning of the year, rapid depreciation, RMB weakness was continuing very suddenly. We're looking at more stability now.
And what's happening with the euro? I mean, we saw it take a little bit of a wild ride immediately after the ECB holding on rates, but saying we need more time for stimulus to really take effect.
Very interesting what's going on with the euro right now. I think that dollar fragility due to pushback US interest rate expectations, this is helping those currencies linked to the dollar, which includes the euro. But I think really as ECB President Mario Draghi, his comments that, you know what, the European Central Bank may have reached as far as it can go when it comes to easing monetary policy. Interesting because other central banks are saying the same things. This is now enticing more appetite towards the euro because they're thinking maybe the ECB can't do further QE. There's not that much further they can go. And the dollar is still looking somewhat weak, so the euro is improving in sentiment.
All right, speaking of monetary policy, we have Bank of Japan policy meeting next week. The yen crossing 110 ahead of that.
Everybody knows the Bank of Japan wants a weaker Japanese yen. However, there's still a little bit of risk aversion in the markets, and when there's times of uncertainty, the Japanese yen is still your friend. We do think the Bank of Japan are likely to continue intervening in the markets when the currency is strengthening. But really what we're seeing right now, and it's very interesting, traders are now beginning to reject the central banks. In 2015, traders were relying on central banks' every word. When's the Fed going to raise interest rates? When's the ECB going to do further QE? Now, as these central banks have shown some hesitance, traders are not listening to them so much. And despite the Bank of Japan wanting a weaker Japanese yen, you can see they're pricing in a lot of demand for the currency.
Before Malaysia Bank Negara meeting on May 19th, there certainly will be heavy focus on that.
Well, actually, what's happened is the substantial rebound of the Malaysian currency is going to ease the inflation pressures. this as such eases the pressure on the Bank Negara to potentially have to move when inflation was at a 7-year high. So we do think that now, with the currency rebounding, Bank Negara are likely to maintain a more stable outlook.
And this is something that you've been maintaining, that they should not move.
Not right now. One thing that I was pointing out at the end of last year when I was being regularly questioned and asked, what could the Bank Negara do to strengthen the currency? Well, look, central banks were left, right, and center easing monetary policy. Yeah. So if a central bank was ensuring maybe an intention to move rates a little bit higher, you're seeing a lot of traders' demand. Now in 2016, central banks are still moving left, right, and center, but just a stable monetary stimulus outlook, it could improve demand. I mean, the stronger ringgit is going to ease inflation pressures, and it's going to enable the Bank Negara to sit back a little bit more.
I'll kick up the heels perhaps May 19th. Thank you so much, Jameel, for joining us today. That was Jameel Ahmad, Chief Market Analyst for FXTM.